Good evening, everyone. Welcome to the weekly webinar. This is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone. So as usual, the webinar will be divided into three segments. The first segment will look at what has happened in the past 1 week. Then the second segment will look at the upcoming calendar. And finally, we move on to the charts to look for any trading opportunities. So for the key events last week, basically the first one is Reserve Bank of Australia. They have held their interest rate at record low, 1.5%, no change. So of course, the main highlight is in the statement which they acknowledge the weakness in their job growth. So as you can see the chart below the screen, it is basically showing the employment information. There's a thin little white line which shows the total employment change. Of course, the light blue bar shows the full-time employment change, and the gray bar shows the full-time employment change, and the light blue bar shows the part-time employment change. So you can see the most recent information shows a slight increase in the full-time job, whereas the part-time job drops. But the overall total employment is in a downtrend. It doesn't show a very good sign. So with this, market is expecting RBA to maintain their interest rate for quite some time, at least for this year for now. So that explains why there's a selling off in the Aussie dollar after their central bank statement. The next important piece of news is basically the non-farm payroll. Okay, for those of you who have stayed up to watch the market last Friday, you will realize that the non-farm payroll came in like the header of this Bloomberg report, an ugly number. So market was expecting a bad number, but not as bad as this, which is below 100K. The actual non-farm payroll came in only 98,000. But if we look beyond this number, there are other figures that we should look at as well. So of course, one of them is the unemployment rate. Interestingly, the unemployment rate fell to 4.5%, which is the lowest since August 2007. So as you can see the chart on the screen at the bottom, basically it shows the U3, U5 and U6 rate. Okay, later I'll explain more about what is this U3, U5, U6. Basically they have a different way of calculating the unemployment numbers. But as you can see, all three ways of calculating the unemployment numbers is presenting a downtrend. So if the unemployment rate is going down, that means more and more people are employed. When more people are employed, it simply means that the spending power will be there for the US market, which has a ripple effect on the economy as well. So although the number of jobs added wasn't as optimistic as what the market would have expected, the number of jobs added only 98,000, but because of the wage growth is also fall in place with expectation, plus the unemployment rate fell to a record low. So we have seen the dollar yen plunge initially, but after that, when the market decides to digest more about the other figures, you see the dollar rebound after that. Of course, like I say, let's look at what is U3, U5, U6, a bit of general knowledge. Basically, these are in simple terms, the way that unemployment rate is being calculated. Of course, the U3 is the officially recognized standard. Just for some information, the definition of any unemployed person is someone who is available to work but currently not working and actively looking for job in the past 4 weeks. So that's the definition of any unemployed personnel. Let me repeat. A person is classified as unemployed if he or she is not working but is available to work and is actively looking for a job in the last 4 weeks. Okay, so that's the definition. So U3 rate is basically the official recognized standard of calculating unemployment. So they look at the total workforce and the number of people that falls under the unemployed definition. Then they calculate the unemployment rate. Then they have other categories like U4. U4 basically takes into account everyone under U3 plus what they call discouraged workers. So discouraged workers means that they are unemployed as well, but they are not actively looking for a job for reasons because they feel that the current economic condition is not good for them to look for a job. That's why it's called discouraged workers. So U4 ratings takes into account this group of people. Then of course the next rating is basically U5. U5 are basically everyone under U4 plus another group of workers called non-discouraged workers. Non-discouraged workers means people who are unemployed but not looking for a job in the last 4 weeks because of other reasons. Not because they feel that the current economic situation is not good. That's why they are not looking for a job. It is basically other reasons why they are not looking for a job in the last 4 weeks will be classified under non-discouraged workers. Then finally the U6. U6 basically take into account everyone under U5 plus all who works part-time. That means it takes into account all the part-time workers as well. So that's a simple explanation of the different unemployment ratings that you see. So we move on. Okay, the next key event, of course, is the President Trump and President Xi, the highly anticipated meeting, 2 days meeting towards the end of last week. As you can see, the photos over here are showing a very harmony, so-called encounter between the leader of the world's top 2 economy. So this is very interesting, but of course, after the 2 days meeting, the takeaway is that there are not much details being released, but the key information that is being revealed to the public, as you can see over here, some of the very important so-called statements or comments being made. The first one, of course, is highlighted on the screen. You will see that Trump accepted Xi's invitation to visit China. And official Xinhua news agency reported President Xi told Trump that there were 1,000 reasons to make the China-US relationship work and no reason to break it. Okay, this is a very strong statement. That means from China's side, they are committed to move forward in a positive way with the US. Then, of course, in response, President Trump also mentioned that after the 2 days, they have built a very outstanding relationship. So this is the key takeaway after the 2 days. At least there are no so-called major conflict surfacing from the 2 days meeting. And another key information from Donald Trump, President Trump, is that he foresees that a lot of potential problems will be resolved after these 2 days meeting. So all in all, in summary, it was a good meeting. That's how the market reads it. So it was a positive news for the world, and we have seen the dollar rally after that as well. So of course, these are the key events that has happened last week. Next, we move on to the second segment. We'll look at the calendar for this week. For tomorrow, Tuesday, Janet Yellen, early in the morning, 4 a.m. is scheduled to make a speech. Of course, this is unlike the usual central bank scheduled interest rate announcement. It is just Fed chair sort of scheduled to speak in some event. But of course, being in her position, whatever she said will have some so-called impact to the market. But we do not expect her to deviate too much from the Federal Reserve so-called official statement in such an occasion. Then of course, the key data that we suggest is a suggestion from us. Possibly you could put a pending short on the pound dollar is the UK CPI. So market is expecting 2.3%, which is above the UK target, the Bank of England target. So if the actual data falls short of expectation, basically if it is lower than 2%, which is their target, possibly we could see a sell-off in the sterling. So this is a suggestion for a pending short pound dollar. And of course, on Wednesday, we'll see at 4:30 p.m. GMT plus 8. GMT plus 8 time zone basically corresponds to China, Malaysia, Singapore. So this is 4:30 GMT plus 8, which is the UK average earnings excluding bonus. So average earnings is basically showing the wage growth. Wage growth is important because if the wage is growing healthily, that means the spending power of people are going up, which is good for the economy. So market is expecting 2.1%. So this is our suggestion. Again, pending short if the actual number comes in lower than 1.9%. The next one is later on Wednesday night, 10 p.m., which is the Bank of Canada interest rate decision. Market is expecting them to maintain interest rate at 0.5%. We do not expect them to make any adjustment to interest rate as well, given the trade deficit that was announced last week. But because oil price has been recovering in the last 2 weeks, so it sort of have a net off effect. So all in all, we would expect Bank of Canada to maybe show less dovishness in statement, but we do not expect them to cut interest rate. But of course, that is our expectation. Then the next question is, what if Bank of Canada surprised the market by cutting interest rate? So this is our suggestion for a pending long dollar CAD. If Bank of Canada surprise the market by cutting interest rate. So if they cut interest rate, the Canadian dollar is likely to weaken, thereby dollar CAD going up. So that's the reason for this pending long dollar CAD suggestion. Of course, after 10 p.m. later the night at 10:30, 30 minutes later, and another about 1 hour 15 minutes later, there is the Bank of Canada monetary policy report and the Bank of Canada press conference. So of course, if your earlier positions is being triggered, the report and the press conference will have further impact to your positions as well. So please manage your risk accordingly. So we going on to Thursday for this week. The key news to watch out for is basically in the morning 9:30 a.m. This is Australian news, their employment data. So there are a number of data being released at the same time. So for this suggestion, there are two criteria. So this pending short Aussie dollar, provided the employment change is less than 5K, market is expecting 20K, meaning there's an increase in 20,000 jobs. So if the number falls short of expectation comes in lower than 5K, it is considered a bad number. And of course, unemployment rate is expected to be 5.9%. So if the unemployment rate goes up higher than 5.9%, it is bad news for the Aussie as well. So we have seen that the employment numbers are actually in a downtrend. So if the upcoming data really confirms it by coming in with a bad number and unemployment rate going up, then possibly we could see more selling off in the Aussie. And that's the reason for this suggestion to put a pending short Aussie dollar prior to the news, expecting the two criteria that was mentioned. Finally, we move on to Friday, end of the week. End of the week is basically towards Friday night 8:30. There's a few US data being released. At the same time, I wish to highlight this Friday is public holiday, Good Friday. So there are a few countries that are celebrating public holiday, as you can see on the screen. Basically Europe, most of Europe are celebrating. US, Australia, and Canada is also celebrating Good Friday. So knowing that it is a holiday, so potential market liquidity could be thinner than usual. Okay, so if you are trading the market, you need to be aware. So of course on Friday there are key US data. I've highlighted two. The first one is core retail sales. Core retail sales basically exclude automobile, the cars. So car sales is being excluded from this data. And of course the other one is consumer price index. This is the core CPI. Core CPI basically exclude food and energy. So the expectation of core retail sales is 0.3% and the core CPI is 2.3%. So in the event both the number falls short of expectation, if the core retail sales drop lower than 0.2% and the CPI goes below 2.1%, then that will fulfill the criteria for our pending order, pending short dollar yen. So basically this is the calendar for this week. So of course before we move on to the charts, a quick highlight of our Accelerator bonus in case some of you are not aware. Do check out this popular so-called bonus that we offer to our clients. The full details is in the link on your screen, fullertonmarkets.com/promotions. You can get up to USD 10,000 for free. Of course, the other one is to highlight our upcoming event in Bangkok on 29th and 30th of April. This is basically our Fullerton Leaders Summit. So most of our clients would have received an emailer. So we have put in place a lot of speakers to provide good value for the entire 2 days, and we have a mystery speaker flying in as well as a VIP speaker towards the end of the event. Do not miss. Check us out at the link offers.fullertonmarkets.com/en/FLS. So early bird discount is ending soon. So if you have not registered for your place, do take action fast. So finally, we'll move on to look at the charts, and feel free to type in the currency pair and the time frame that you want me to look at. So while we are typing in the currency pair and time frame, I'll just quickly review the charts that we have looked at 2 weeks ago. The first one is basically the pound dollar chart. Okay, the vertical line is the time of webinar 2 weeks ago. So my comment is possible entry after formation of bullish engulfing pattern. So I'm going to zoom in so it is easier for you to see on your screen. So I mentioned that I'm waiting for price to retrace to around 1.2530. If it forms a bullish engulfing, that will be my entry criteria for long. So that didn't fulfill. Price did not retrace to 1.2530 to form any engulfing pattern. It basically just fall right through, as you can see over here. The pause was higher than 1.2530, which is around 20 pips higher. So I was looking for it to hit somewhere closer to 1.2530, and if it forms a bullish engulfing pattern, and that will fulfill my criteria to go long. So the first chart did not fulfill my criteria. The second chart is basically dollar yen. Again, my criteria is look for bearish engulfing pattern around 111. So 111 is basically this red horizontal line over here. That's the price 111. So I'm expecting price to go near it. So again, the price did not go near. It was like hovering halfway through, and it started to turn down. Then after that, it breaks right through at a higher price. So it doesn't really fulfill my criteria of around 111. We have seen that over here, a few candles actually close above 111 already. So for dollar yen, again, doesn't fulfill my criteria. The third chart that we have looked at is basically euro yen. So again, the vertical line is the time of the webinar. So I mentioned that there are 4 possibilities on for this currency pair. So of course, whatever my suggestion, usually it will last for 1 week. Anything beyond the 1 week, we'll have to relook at the price action and decide where I would take a buy or a short. So as you can see over here, the price went near to 12050. So as long as there's a bearish engulfing, that's where I'll go in for a short. So of course over here, there's no bearish engulfing until this pattern. Okay, this is what we call a bearish engulfing. A bull candle followed by a bear candle, which is longer than the bull candle. So over here is where the bearish engulfing happens. Of course, over here we have not seen any bearish engulfing earlier on. So over here you have taken a short. Over here, hopefully you have not placed such a tight stop, which is just a few pips above. So if you have taken a tight stop, so most likely after the drop, if you have not exited and it goes up, you will have taken your trade out before it goes down again. So for the week of 27, this is 31st, which is close to the end of the week. So basically the 2 vertical lines shows the period for the entire week. So if some of you manage to catch this short trade, that will be good for you. But after that is whatever I mentioned, the 4 suggestions should be reset for something else. So this is basically the euro yen. But of course, if some of you have not caught this, it is fine as well. There's always other opportunities in the market. So the next chart that we've looked at is basically pound yen daily chart. So I have marked the descending triangle. So market is pretty quiet throughout the last 2 weeks. So the suggestion that I've given, criteria for long, if it close above 140.4 where the green box is, and if it close below where the green box is, as you can see, did not really fulfill the criteria for both the long and short. Next is the gold. Okay, again, gold, I've given 2 suggestions. One is a long. So if candle close above at the green box or higher, possible to go long. If it close below at the green box, possible to go short. Again, the price is being a very tight range, doesn't fulfill my criteria to take either trade. Finally, we have seen the euro dollar chart. This is a H4 chart. Vertical line is where the time of the webinar. So again, I'm going to zoom in. The first criteria I want to see is if the price goes near to 1.0845, and then if it bounces up for a so-called bullish engulfing or bullish candlestick pattern, possible at the green box to go long. So you'll notice that there isn't such a pattern forming and price just breaks right through. The other formation that I'm looking out for, if the price retraces to around 1.0815 and then bounce up. So bounce up to form a bullish so-called candlestick pattern. So again, that didn't quite happen as well. As you can see, the 2 bear candle fall right through, and the subsequent candle did not even close in the green box for me to enter a long trade. So for this 2 long entry, didn't fulfill criteria, and the next moment, prices fall right through to my next suggestion for a short. So I'm looking for a pending short if the candle close in the green box. So candle fall right through. As you can see, the closing price did not really goes into the green box, and then there was a pause. Okay, there was a few candle pausing, as you can see over here, 1, 2, 3. A candle pause, and the next moment candle broke downwards. Okay, of course, this kind of pattern wasn't the kind of pattern that I anticipated earlier on. But if you are a price action trader, maybe you could have considered this as a breakout candle, closing price, and then going for a short. So if you have done that, you will be 150 pips down, and depends on whether you are trailing stop or you are grabbing just 50 pips off this possible trade. So basically, these were the charts that we have looked at 2 weeks ago. Let us quickly move on for this week. Okay, before we look at the chart, why did US dollar strengthen after NFP? Okay, I think you have missed the first part, so I'll just quickly repeat. Basically, the US dollar strengthened. It dropped initially for the first 5 minutes because the non-farm payroll numbers came in really bad, 98,000 versus 170,000 of forecast or expectation. So it falls short of expectation by a big margin. So that's why the dollar weakened initially. But as the market looked closer to the other data, especially the unemployment rate actually fell to a 10-year low at 4.5%. So it was an encouraging number. Plus, because of the President Trump and President Xi meeting, they end off in quite a positive note. So it is a good news for the US as well. So all in all, that's why we see the US dollar strengthen, even though the non-farm payroll number wasn't that good at all. So let us move on to the chart for this week. The first suggestion is basically Euro dollar H1. Okay, let's look at Euro dollar, which is this chart. I will just remove all the markings first. I'm going to change it to a H1 chart. I'll put a vertical line. This is the time of the webinar. So what you see over here, Euro dollar very strong downtrend, especially on a H1 chart. So I'm going to zoom in so that it is easier for you to see. Market is consolidating for the last so-called 1 day or so. 1 day of trading. So it is from Friday until now. So the consolidation is within this area over here. Plus minus 1 or 2 pips shouldn't make much of a difference. Okay, 1.0594 and 1.0574. This is very tight 20 pips range in the last 18 hours of trading. So one of the suggestion is of course, I will be looking for a breakout trade if it does close at the green box there. Okay, I'm going to put a price so that it's easier for you to take note of. 1.0568. Okay, green color for entry. Okay, if a candle close at 1.0568 or lower, that would be my criteria to go short. So this is a typical way of a breakout, my typical way of breakout trade. Of course, the other possibility is if the price retrace all the way up over here for whatever reason, that would be my criteria to go long if it close above 1.0594. Maybe around 1.0603. If it close at 1.0603 or higher, that would be my criteria to go long. Because the consolidation is pretty small on H1 chart, it is only 20 pips. So I personally, for such a tight consolidation, I prefer not to play within the consolidation. I would prefer to choose to look for a breakout play instead. So this is basically Euro dollar H1 for me. The next suggestion is silver. Silver daily chart. Okay, let's look at silver daily. Okay, what you see over here is the silver daily chart. Downtrend, and that's basically the overall trend is not so clear on a daily chart. But if we look at the near term, it is more or less in a consolidation state over here. Very big consolidation over here. So as you can see, the silver price has been climbing in the last maybe 2 weeks, 2 weeks plus, I would say, almost close to a month. 2 to 3 weeks has been climbing up. Of course, silver price at this moment, it is correlated to the US dollar. So it depends on the strength of the dollar in the near future. So for this week, the key data that probably will affect the US dollar is towards the end of this week. So other than that, I do expect some technical play in for the dollar. I don't expect the dollar to strengthen and push the silver all the way down. Let me just mark the range, 1840 over there. And maybe 1680. $16.83, a few cents, which is fine. Okay, let me look at the lower time frame and okay, why I'm looking at the lower time frame, because on the high time frame, it is quite hard to gauge where that I could possibly take a trade, and lower time frame will see some refined price action. So as you can see over here, the price sort of broke the support. Okay, I see a support around here. The price broke, retraced, touched, and now it's pushing downwards. So it is telling me the downward momentum is still predominant at this moment. So I'm going to switch back to the daily time frame. So as you can see, after a bear candle, okay, so price is pushing downwards. So if we go by some candlestick formation for a short trade, we could consider this 3 black crow over here. Okay, there's a 3 bear candle. So usually 3 bear candle is a bearish formation. So after this candle close, the next candle, possibly that could be a suggestion to go short at the next candle. Of course, the other possibility is to refine the entry at a lower time frame. Is wait for candle to retrace back to the so-called possible resistance, and then push it down again. That would be our my entry to go short. Because after such a short drop, so there could be a possible so-called profit taking to push the price back up before more sellers join in to short the market again. So that is a typical so-called price action that I see in the market. So that's silver for me. Be it depends on your preference. If you are just focusing on the daily chart, then after the 3 bear candle, that would be the 3 black crow candlestick formation for a short. Or you prefer to refine your entry by looking at lower time frame and wait for a retracement back to the possible resistance, which is around the $18 level. Quite a round number, and if it pushes down again, that would be the signal for me to go short. So that would be the silver. The next chart on my screen request is dollar yen. Okay, let's look at dollar yen. Dollar yen, the request is okay, there are a few requests on dollar yen, various time frames. So what I'm going to do, I'll just scan through the dollar yen various time frame. I'll just pick one that I find suitable for me. Okay, so this is the hourly chart. This is the H4 chart, and finally the daily chart over here. Okay, I'll go with the H4 chart. Which is still in line with what we have written in our weekly research. So this is the region 111.45. Oops. Okay, so this is 111.45. So in our report, we mentioned that if the price find a rejection of the 111.45 region, possibly can consider for a short on the dollar yen. So we foresee after a positive meeting between President Trump and President Xi, of course, there's nothing concrete. Plus, market may start to rethink on the NFP numbers. Yes, the unemployment rate is much better, but if you look at the non-farm payroll, it is still a very bad number. So market may start to scale back on rate hike expectation in June. So if that happens, possibly we could see a dollar yen heading towards 110 again. So that is our so-called reasoning for a short dollar yen. If price finds a rejection of 111.45, as you can see over here, there's a strong push upwards, and there's a 2 bear candle over here. Let me zoom in. Okay, I'm zooming in so that it is easier for everyone to see. So now price is trying to test it again. So of course the aggressive entry would be at this moment, okay, because after all there's a pin bar that failed to cross above, and the next candle is actually a bear candle. So the current candle could be possibly our entry to go short. Okay, which is at the opening of the candle, that would be my price to go short. And the stop loss would be, there are two stop loss over here possibly. A tighter stop loss over here, or if I reference the last high over here where my cursor is, my stop loss will be way high up. So this is a difference between a 46 or 47 pip stop loss versus a 108 pip stop loss. So to me, if you ask me, I would prefer in this case a tighter stop loss because the conservative one looks a bit too far-fetched for me. I rather take a more aggressive stop loss. If I'm wrong, I get out and I will look for the next trade. So that would be my choice of a tighter stop loss over here, and my profit target would be somewhere there. Okay, some of you may ask, why do I take profit around the blue box? Okay, it is before it hits into the support of around 111040 plus minus. So do bear in mind that if you are taking a short trade, the price need to go beyond your profit target in order to cover the spread. So if I put my profit target where the blue box is, which is around maybe 111. Let's say 53. If I put my target at 110.53, it means the price has to go lower to 110. Maybe 51 to cover the spread before it can trigger my profit target. So by then it is already very close to the support. So as you can see over here, if I take a 46 or 47 pips stop loss, my potential is about 76 pips. The risk reward is a bit more favorable to me. So this is basically dollar yen for me. Next currency pair is pound dollar. Oh, pound dollar. Okay, great. I have a pound dollar over here. Let me reset the chart. Request is on H4 time frame. The vertical line is the time of the webinar. So for pound dollar, the downward momentum, I see a downward momentum, of course, over here since the third week or the final week of March onwards. Sterling has been weakening against the dollar. Of course, the downward momentum is not very strong, as you can see over here. It is quite gradual, moving downwards. So a possibility for this is a short, and the price is currently retracing upwards. So if it retraces higher, to around 1.2425, thereabouts, and if it has a bearish candlestick formation over where the box is, okay, let me draw the box. Okay, the green box, sorry, just give me a moment. Okay, once the price retraces higher to around 1.2425, that is where I will start to look for so look for a bearish candlestick pattern around 1.2425. To go short. Okay, that's basically pound dollar for me. Okay, the next pair are the yen pairs. Okay, interesting. Pound yen and yen trades. Okay, in that case, I'll just look at pound yen then. Pound yen, and the time frame is 5 minutes. Great. Let's look at pound yen. 5 minutes. We have some variety over here. 5 minutes chart, pound yen. Okay, so this is basically 5 minutes on pound yen. Quite a consolidation over there. Okay, as you can see, what I display over here is the spread for pound yen. Okay, the bid and ask price. So anyway, I'm going to zoom in. So when you zoom into low time frame, it may seem the spread is very wide, but this is quite a normal spread for pound yen. It is only 3 pips. So you can do that, put an ask line on your chart to display this spread so that it is very visual. Of course, for this one, I'm going to disable it for now because it's quite distracting to have too many lines showing on the screen. Just give me a few seconds to take a look at the chart. Interestingly, the consolidation area is getting bigger and bigger. For this 5 minute chart, if you ask me, I don't have entry criteria. But if you are trading any strategy, whatever strategy you are applying for pound yen on a low time frame chart, my suggestion would be Okay, scalping strategies. Apply a ranging strategy. That means strategy designed to work when market is consolidating. Because this is a M5 chart, I don't need to say apply a scalping strategy. It is quite obvious. M5 chart most likely will be applying a scalping strategy to get in and out fast. But this is one of the good ways to apply scalping strategy. Take a small profit, especially when market is consolidating. Because when market is trending on a low time frame, then it is quite how should I say, quite inappropriate to apply a scalping strategy, because if it is trending, why limit yourself to that 5-6 pips? So of course this is, I see that the pound yen is actually consolidating for now. And for this week, there are not much of sterling news, especially at most the few that I've highlighted earlier on in the calendar. So this could be at least for now, until the UK news, it would be a ideal time for any scalping strategy or any ranging strategy. If you ask me, my trading methodology, I don't see any potential entry on pound yen chart, because I would have identified the decision region to be here, which is smack in the middle of consolidation. So even if I take a long, it would be a very bad risk reward. If I take a short, it will also be a very bad risk reward kind of trade. Okay, let me look at the next currency pair. Okay, there's a question for the pound dollar setup just now. The stop loss, would it be around 1.2490 area? Okay, let's look at a good question. So for this short trade, the conservative stop loss will be somewhere here, which is pretty wide up. I'll mark it with a red box. Okay, that is a pretty conservative stop loss, which is about 113 pips away. So again, it is again too wide for me as well for this trade. 100 over pips. I would prefer something tighter, just above 1.2425, maybe about 20-25 pips above. I think that's good enough. So this trade most likely will give a 50 pips stop loss for me, which is around 1.2450 area. Okay, since we are at this chart, then of course, if the price really shoot all the way right up without turning down at 1.2425, then the other suggestion would be similar pattern, but at a higher level around 1.2490. So there's two possibilities over here. Okay, either one, depending on which pattern form first. So in the event, let's say the current candle or the subsequent candle shoot right up towards 1.2490, and if it turns down gives a bearish so-called candlestick formation around 1.2490, that could potentially be my short trade as well. So it's two possibilities. Okay, pound yen. Okay, same pound yen can show H1 chart, sure. So since M5 chart, I don't have, based on my trading methodology, I'm not able to determine long and short, then might as well I try H1 as requested. Let me open another chart. Okay, so this is H1, H4 chart. This is H4 chart, downtrend. Let's look at H1. Okay, this is H1 chart. Interestingly, we have seen how the price consolidate over here for the last very tight range for the last almost 12 hours. Exactly 12 hours. So let me just go to 15-minute chart will look nicer. It is able to refine my entry better as compared to the H1 chart. So as you can see over here, that's where the price is consolidating for pound yen. About less than 30 pips kind of range over here. So pound yen typically is a more volatile pair compared to the other currency pair. So 30 pips is considered quite a tight consolidation for pound yen. So instead of H1 in this case, so now it's in between H1 and M5. Apparently M15 chart will give me a better choice of entry over here. Okay, I'm refining my entry. So if I switch back to H1 chart, you will notice that the consolidation over here, and you'll see a very nice area of conversion around this 1.1378 about 137.83. That region looks like a pretty nice so-called conversion. So it sort of coincide between the M15 chart and the H1 chart as well for a short entry. But anyway, I'll just focus on one time frame. Over here, this green box would be my criteria to go short if price close below. Okay, just now on the H1 chart, I would have identified around 137.83, that area. So if candle close if candle close at 137.78 or lower, that would fulfill my criteria to go short. And of course, the other one is over here for a long trade. And the price is about 138.17. If the candle close at 138.17 or higher, that will fulfill my criteria for a long. Okay, so that's pound yen 15-minute chart. Okay, great. So very quickly we have again come to the end of this week's webinar. So on behalf of Fullerton Markets, I thank you everyone for your kind attention, and look forward to seeing you in next webinar on the 17th of April. And if you find that this webinar is useful to you and you have friends who may be interested to attend, feel free to share the registration link to your friends for them to attend as well. So this is Wayne signing off. I wish everyone a good night and happy trading for the rest of the week. Good night and bye-bye.